Hey, what's going on, guys? So this is going to be the pre-CPI trade reviews, and this is going to be on Apple, a couple roles within some other positions that I've already previously made money with. We also had some Rivian commons, and then also I unfortunately stopped out of the Rivian position as far as options go today, but this was a beautiful Tesla sympathy. Um, basically just basically just a electric vehicle company, and we had this massive weekly accumulation that was previously building from over here on this little inverse head and shoulders model that was happening beneath this external that was right off of 1168, right? So this was technically a breakdown followed by preliminary accumulation. You get your secondary low of accumulation, your pop, obviously your drop, declining volume and drying up volume on the drop, and then obviously the expansion that led to now a recorrection down here towards these lows. And this is just simply put right at this weekly area where we've been consolidating around where we previously pivoted off of, right? So it would be basically off of like this weekly level. And this is where you had your previous level of preliminary accumulation kind of happening at. And then basically when we get back down into this area, you're getting these very heavy volume anomalies that are sitting off this area. So this is clear accumulation, especially given the fact that Tesla has got to see some really nice momentum in October, in the end of October, October 24th, which was the Q4 report of this year, right? So you go back over to something like Rivian and you go to the 24th of October, and this was basically just seeing some really nice consolidation where we actually did get a new lower low through the report. However, that lower low was just bought up and then obviously soaked up into the top of the earnings gap itself. So this was where my trailing was at actually. Off of this area, and I've been looking to add into this area off of the earnings gap itself. If you guys know how I trade by now, you should know this, right? This is technically your earnings gap. I wouldn't take the whole entire gap. I'd more or less just take swing low, swing high discount, and that would be my risk for commons. I would be looking for a higher low of some sort and a plan to accumulate technically above $10, right? So this saw a really nice move through news, not even really the most bullish looking news as far as like what the headline was. I didn't even really read too much into it, but yeah, marked up really nicely within after hours, so that's going to open up tomorrow pretty nicely. We do have CPI still, so that's also why I got rid of a lot of my positions today. I do have a roll on DraftKings, decent little trade over here where you had your pop, you have a sell. That sell was basically just back into this high over here, held the high throughout the pre-market session. Then we got into your open, and this was basically just like a pop and then drop. I bought the drop and I look for a continuation, and then I bought the drop one more time. So I still have some size in off of this area, and I do have my December 20th swings. ZOM, been planning to add this one off of this earnings candle high, as well as just this massive previous weekly level. And like I talked about plenty of times on end, whenever you take out an external or you just push down and then you find a leg and then you find a potential higher low in the weekly, I would like to see follow through off of that candle itself, right? And this is where you had your fake out candle technically with a sell wick on the top and then an ugly looking body. And then the next following week, what happened was we actually recovered with two inside bars within the earnings candle itself, followed by a break, that break on heavier volume, and now we have printed our one, two, three, four, fourth inside bar on this candle right here on November 6th, right? And it's above this massive weekly resistance. It's also above the earnings candle high, right? So everything that ties in with this chart's really nice. We have a gap above us to fill up into 124.08. I still do have a little bit of size over here, but I don't have a lot of expectations with this, and I basically took this for an intraday trade off of 119.83 or just 120. So like that little ad zone was my area of focus, with the risk obviously being off of this candle low out here, this outside bar low, right? So when you go into the hourly, what happened here was we chopped around right off of this hourly lower high trend, and then obviously there was not enough of a buyer or volume to break this thing through, and this is more of a passive bid, more of a quiet tape, right? So you would want to find some pullbacks on this if you would want to take size. And then I found the volume anomalies on the 5-minute down here right off of that level, and I was like, okay, yeah, I'm going long. Went long here, had a risk basically off the 5-minute candle, or the 15-minute candle, I guess you could say, this 15-minute hammer, right? Which is also technically sweeping the previous day low. And then we actually just got right back above that previous day low if you go into the 15-minute and see how that was a red to green 15-minute bar that turned into a hammer on increased volume. I took it for relief back up towards this opening range up here, and then that's whenever I started to scale off some of these just because we do have a CPI report tomorrow. I don't want to have a lot of exposure as far as options go to anything. So with that being said, that was ZOM, not anything too special over there. Kind of a pair trade with the Apple short, and I've already talked about the Apple short throughout the week. I actually swung this one from um, Friday into Monday, and this was a beautiful short side swing where this was your size up here off of where you would find lower highs spotted from this previous uh, daily support that was actually kind of created over here. And then this is also basically your earnings gap, right? So we filled the earnings gap, got above, retested a previous level that was very important, and then that's whenever we started to fail, right? So you go into your 15, and you take a look at this thing and you're like, oh, okay, yeah, this makes a lot of sense, right? So this is a previous entry from over here, basically with a risk above like um, this trading session high, right? And then I'm targeting down into the support towards the lows, right? The support towards the lows being like the previous, this previous bull gap that was sitting over here. And I was looking for actually a sweep of it, but you would still want to scale within a support like this. This was basically a 6R trade, and then I basically just ruled that profit, noticing how there was no buyer really off of this area. It was more and less just defending the end log that we had off of the open, right? Of this week, and it was this territory from right over here, and then you could just take swing low, swing high of this potential daily higher low. I'm sorry, lower high that is coming off of 228.60, which is also a big daily level like I just talked about. And this was a beautiful opportunity to think about rolling this today off of like discount. Risk this high up here at 225.70, and then my risk was technically 225.92. And if you go into like a 5 or a 15 and you take a look at where the risk to reward kind of was for this one, target never really got fully reached over here, guys. I'm not going to lie. But yet again, I was in a base hit mindset today, and that's just my decision making. If you guys could have a totally different plan if you'd like, you could take profits quicker than me. You can think about holding longer than me. Your trade plan is your trade plan, and I try to tell people that, and I try to tell them that base hits are not a bad thing to do. It just depends on context of where we are actually at within the market. So this was a short side position, entries off of like these wicks up here, with a risk basically above the 618, and then you could take a look at like your discounted range for the upside as well, and then just start thinking about like scaling this thing out at like a discounted higher low area that could potentially happen at like 223.55 to 223 psych. And this has just been a really nice chart to trade both ways, as far as just shorter time frame stuff goes. Ford, nothing really happened with Ford. Basically just bought the dip within this gap today. So this is your gap. I actually bought it off the open, and then those ads seen a little bit of drawdown, but I just wanted to make sure I filled the gap. It's not anything too crazy here, guys. We opened ever so slightly above the gap, and then from there, we actually failed this daily level. Or I'm sorry, this gap up candle high at 1123, and we failed to get a daily print over that. So I'm going to be very lenient with my ads on this one on Ford, but I do have some exposure to options here with some swings. They're not out of the money, and they have a lot of time behind them. So I guess we'll see what happens, but my plan is to accumulate some calls where this wants to eventually retrace into the bottom down here. And then maybe, or like this area, right? So basically just like the 1050, 1060 area, and then I'd be looking for expansion above 1137. So I don't have a lot of exposure over there as of right now, but yeah, that was that one. INTC was a really nice roll opportunity today off of this gap, but it's basically just an intraday trade, or you got to buy some time and plan on swinging this thing for a red to green recovery as far as the weekly print goes. You guys got to be very patient and add incrementally with some of these names if you're looking at the week by week prints or even just the daily candle closures, right? We have a lot of events throughout this week, and we also have. We don't have an end log, but we have a lot of things going on. Obviously, we had this 3-day breakaway gap series from the election, so that's pretty difficult to obviously read, and it's pretty hard to really gauge where things are going to be moving whenever you're up here on the charts rather than within an internal structure buildup, right? It's a very simple concept, yet a lot of people try to outsmart the market where it's at right now, and I just feel like a lot of them aren't going to be able to do it. Um, Me being one of them, and yeah, I feel like a lot of people don't want to ever admit that, but that's just how the game works, guys. Um, as far as everything else goes, I took a loss on BA today. I had some calls on this day. Took them into up here, right? Entries were more towards like 149, 148-ish. Took them up into 153, scaled a little bit. It rejected the bottom of this gap here, which is a daily slash weekly resistance. And basically more of like a daily resistance off of the gap. And this is basically where your lower high would be, right, with these two heavier volume sell bars. And you could basically just pull the fibs from low to high, and that's basically lining up right with the 618 off the bottom of the gap, as well as industrials just really not catching much of a bid. If you go over to stuff like MMM, pretty gross candles over there, and really no agreement or no rotation that is shown truly yet. And crypto caught a lot of the attention as of lately, right? You go over to names like crypto miners and stuff like that, Mara, Riot, and you guys know I've been preaching ever since all the way back here throughout all of this consolidation. Don't trade these, don't trade these, don't trade these, right? And then, you're going to have everybody who's a future millionaire and a billionaire whenever you have a candle like this, but nobody was getting cooked over here in any of these ranges, right? On really heavy IV, right? Not the best premium. Not even in full agreement with Bitcoin a lot of the time. You had nobody getting cooked anywhere in here, nowhere in here, nothing in here, but everybody's a trillionaire on this 3 continuation candles, right? So yeah, it's funny. It's funny to me, but I also just don't care. That's why I haven't been trading those. Kava. Nothing there. Oxy, been loading commons, kind of like the flush play for tomorrow with Oxy. Definitely not a bad one. Really flat throughout the report. If we could get some intraday volatility tomorrow, I'll be very interested to see where this thing could go. What I would ultimately like to see would be, this is more and less of like a very higher time frame zone that I'm planning on adding commons throughout, guys. This is not really more for like intraday trading or shorter expiration options trading. It's more for my commons and just accumulating shares. But I really like this with the flat report, decent premium there, and I could potentially start buying some trash from somebody on some further out expiration. I don't know, maybe I could get a decent little fill with maybe 2, 3, 4 weeks out, and we'll see where this thing can go. But I am leaning a little bit bullish on this one in my first initial target, as far as more of a higher time frame analysis type of swing would go, would be this gap up here from 52.69 to 53.91. And we're currently trading at like 50, right? And this is probably 50 cents of risk at max, and we do have a low down here to play with, and or potentially see if we could bleed beneath and find a new buyer off of 49.51. So it's kind of similar to BA, really no true signal, but I really do like how everything's formulating on higher time frames. If you go over to BA, I still think a markup can definitely happen with BA as we're getting these several weeks of volume anomalies, and I would probably say I try to front run this chart a little bit too much, but I've made money 3 times on it, or maybe even 4. So bottom line is that I walked away unscathed, right? And actually with a win. That's basically all that matters, and that's what a lot of people have to understand with like some of these charts here. Like it's okay to, keep on looking and keep on looking for that markup phase. And if you don't get it, you don't get it. But if you had other opportunities to add onto this thing and you took really clear, clean advantage of those opportunities, then you could walk away with, you know, trying to go for a really nice trade and not getting it, but then getting it a couple other times, it's totally fine, right? I talked about that today with like ZOM. I was in ZOM off the open, and it was very, very, like I bought it over here. I bought it down here, popped up, and then obviously stalled off the highs, and then the volume basically just dried up throughout the whole entire area. And then basically what we did was like crack structure on like smaller time frames after the volume dried up here at 10:35. Then the volume increased and we sliced right through all the higher lows throughout the morning session. And this was obviously a failure to create a new high here. So I was like, oh yeah, this is probably a great thing to cut. And I was green from here to here 20%, and then it sliced through, and then I was a little bit red and I cut for like a paper cut. And like if that affects you, then like I really wouldn't be trading shorter expiration. My plan was off of 120, right? And then I found the volume anomalies, I found the signal off 120, and I was like, okay, yeah, I'm probably gonna buy this for at least just an intraday swing. I bought it. This thing popped about $1, right? And I had next peak expiration. Wasn't really the best or worst trade, but it's like if you're looking for base hits, it's not really that big of a deal to lose once on a chart, make it back, and then maybe look for it one more time on a roll. Um, and then everything else throughout the day that I traded was basically just like closing swings and stuff. Like I closed some Disney today. I still own some contracts with Disney. I'm holding 2 contracts for the earnings report that's happening over here on November 14th, which is Thursday, Thursday and after hours. I will be looking for 104.21. However, this is basically a fully de-risked position. This is my new trailing. I guess you could call this previous daily resistance as your new trailing, is now a support with the low a day that is now created off of this area. I talked about Disney probably 7,000 times in here. So if you're not in it up here, or you didn't catch this candle after I told you 500 million times, then you're not trading the right plan that is in agreement with how I trade my plan, right? So it's totally okay to take some leaps and just look away, or just a lot of time. I just feel like a lot of people didn't really catch this one because they might have bought too close of an expiration and then they got weeded out, or maybe they got scared throughout the whole like election. And I don't think this move has anything to do with the election. Like I said, I've called this one from over here, even the secondary higher low, and then obviously the expansion throughout this whole like daily congestion area. So yeah. Oh, I had some Google today as well. This is a little tiny base hit. Nothing too crazy about this one. And then I stopped out because I was like, I can't, in my trade plan, I was like, I don't want to get caught up in a sweep. I don't want this to happen, right? And then basically what happened, guys, was I bought this right on the break, filled some on this candle, filled some basically above 180.68. Whenever I saw the momentum and I saw some nice volume pouring in over here, and then this popped up to 181.89, so I was up about a delta on my cons, and that's whenever I was like, okay, yeah, I gotta de-risk the earnings candle high. That's just not a good area to really be playing with. And then we never got the true continuation through that. We more or less just got this really ugly looking hourly candle. And I actually thought this was going to sell, but it didn't. And that's why the activity is very weird throughout CPI, and sometimes structure, price, volume don't really respect themselves, and you'll get caught off sides extremely easy leading up into an event. So, yeah, that's basically it. There wasn't really anything else to my day. Um, Ford had a decent close. I will be monitoring this one, like I said, and probably taking some heavier size and closer expiration here pretty soon. I just feel like this chart's really shaping up, and it's going to play some catch up with GM, which is a really beautiful move ever since the breakout bar that we actually had on October 22nd. So everything else, guys, basically some rest leading into the CPI. You have some new all-time highs within ETFs, and then everything like the Russell. All of this kind of stuff is just to be determined, I guess, throughout this report. and then we'll see the true data, um, and then base it off of, something we can do moving forward after we get this out of the way. So I'm probably going to be up a little bit earlier tomorrow, hitting a scan, maybe throwing some charts in the chat, and then yeah, we'll see. I don't know.